Good afternoon. This is Christopher and Catherine Tipper of Hunter Benefits Consulting Group. This is our On the Couch, the Friday afternoon bourbon edition. We're having to film it on April 1st instead of on April 2nd because of some technical difficulties. Please forgive Catherine. She's got some laryngitis today. And today we're at the beginning of our second year of videos, so hopefully you're liking them more and they're getting better and they're more and more helpful. Now, our On the Couch series is supposed to be a lighthearted and hopefully slightly humorous look at all things ERISA, retirement plans, compliance, things like that. We think we've got a good episode for you today. We're going to be talking about large plan audits. So we'll be back in a couple of seconds. Thank you. So now then, before we dive into large plan updates, Catherine's gotten her voice back and she has a little bit of an update about the company. Catherine?
Well, it is April Fool's Day, and but it's still a good day for bourbon.
I wasn't going to say that.
But we have great news. We opened up our Woodstock office today. So
what's going to be going on up there? Anything?
Yes, lots of hard work.
What's going to be going on up there? Yes.
No, it's some of our younger people, we're going to have them crunch data hard and do the very best they can to get
data scrubbing and things
data
like
scrubbing,
collecting.
Online, everything.
Okay.
We're ditching the paper, man.
Opening
and
up
I have
a
the
new,
young brains to do it. So
opening up a new chapter at Hunter Benefits. Thank you.
Digitally.
Digitally. Kristina,
Yeah.
do we have an update or an update today from Washington?
Well, that depends.
Yes.
Do you want to talk about the DOL and the OMB? Or do you want to talk about the DOL and criminals?
Oh, we'll take door number 2, please.
Okay. In November of 2020, the Trump administration sent a letter through the DOL to, this organization, Securities Industry and Financial Markets Association.
Yeah, I'm very familiar with them.
No, not at all. Anyway, and they were saying, well, even though your asset manager may have a conviction under a foreign law, we're not going to pay attention to that. Yeah, well, that was my reaction. Really?
But before that, before it was changed in November 2020, I mean, back since Ulysses S. Grant and everybody else, not really.
Well,
okay, the rule was if you had a foreign conviction, you couldn't be a money manager, right?
Right.
And that was changed in November of last year?
Well, there was just
Well,
before
they flew
the
that
election.
under the radar, didn't they?
And they really did, because they went around EBSA, who understands prohibited transaction exemptions, and they failed to follow the DOL's rules about posting it on the DOL website. It was like weeks later that they finally posted it, in January, I believe.
And so now so the rule is to put it back the way it was.
Yes.
When was that effective? Last month?
Yeah.
March? Okay.
Yes. And what they're going to do is they're going to look at it and review it and determine the logic for the Trump administration to make that statement and that letter to the managers was not based on real ERISA law.
Okay.
Okay, and the fact that they went around, they cut corners too far and too fast. So I don't know about you, but I don't want an asset manager who has any kind of conviction.
Convictions anywhere.
Yes.
Even in Candyland.
Yeah.
Okay.
So instead of what happens in Las Vegas stays in Las Vegas, it was what happens in Switzerland stays in Switzerland?
Pretty much.
Something like that. Wow, interesting take. Thank you very much, Kristina.
You're welcome.
Catherine.
I prefer my money managers to have a foreign accent to their fraud.
Does that make it more appealing?
That's more, it's sexier that way.
It's sexier
Yes.
that way, yes.
They will take your money.
Catherine, from an ERISA point of view,
Yes.
what season is it? Remember, it's a PG-rated show.
Get ready to rumble for the 5,500.
Exactly right. All right, I was hoping you're going to get that one right. Okay, so yeah, well, you're right. Okay, so it's time to start getting ready for 5,500s. So, 3 questions for you.
Okay. Do I get a
Each-
wish out at the end?
No.
Oh, jeez.
Each one of them possibly a trick question. Yes, bourbon up. Okay, there we go. Sorry. Possible trick question for you.
Yes.
If a company has 150 employees eligible for the plan, but only 20 of them have an account balance, does the plan need an audit?
Yes, because eligible means that they're part of the plan, even if they don't have balances.
The eligible means they are a participant with or without an account balance. Correct. All right, 1 out of 1. Good. Second possible trick question.
Yes.
These might not be as tricky as I thought. You've been paying attention lately. If a company with 150 employees eligible for a plan,
Yes.
have those eligible employees split equally between 2 plans, do the plans need an audit?
No.
You really are paying attention. Correct, because we've got less than the count is per plan, not per employer. And with my easy math example, we've got 75 people in each plan, which is less than 100. Third possible trick questions. Really need to try harder next time. Okay. What if Hunter Benefits Plan, our plan with our approximately 25 employees, was inside a MEP, a multiple employer plan with hundreds and hundreds of employees in it? Would we be part of an audit?
Yes.
Yeah, darn it, 3 out of 3, you got them all right. Okay, but you're right, it doesn't matter. So even if the adopting employer inside a MEP has less than 100 participants for that employer, if the plan as a whole has over 100 participants, you're going to need an audit. So if you've got a MEP with a lot of small plans in there, you got a lot of employers paying for an audit that they don't need. But anyways.
So, but we want to make sure that we're talking about the audits that are based on size. It's not an IRS audit or a Department of Labor audit.
Correct. These are the mandated, you have to do them every year, not the theoretically random IRS and Department of Labor audits. Okay?
So size does matter.
Yes. Yes. Okay. All right. Now then,
You'll always remember.
moving right along, let me share some quick facts about large plan audits. All right. I did not write down that you have to do them every year. It's not the IRS deal, but you're right. That should have been number 1.
Can I make a point or ask a question? Why is this a big deal? Why is an audit a big deal? Look at, they all need to take a drink
We all
before they
need
answer
that. Why
that
is an
question.
audit a big deal?
First, it costs a lot of money.
Yeah.
Second, it can be a hassle because it's a lot of extra work
Major.
if you don't do a good job of getting your act together.
Right. Yeah. And more of both of those this year because of some rules which we'll get to in a second here. All right. But you're right. What I'd like to do right now is hopefully share some quick facts about large plan audits. This is the second take. All right. The eligible participant count is as of the first day of the plan year. We normally think about December plan year end, so we're going to say January 1st. It's not the count as of December 31st, it's the count as of January 1st when a lot of new people come in the plan. All right? Number 2. Participants without account balances do count. They are participants. All right, this is where we got stuck a minute ago and why we're on the second take. The first year of the plan, you determine whether or not it's a large plan on the first day of the plan year. If there are 100 or more participants in the plan the first day of the first plan year, you're a large plan, you're subject to audit. If you have 99 or less, you're not. Okay, now then, once you are a large plan and subject to large plan audit, you need to go below 79 participants, not just down to 99. You need to go 79 or less participants to do away with the audit. But if you do get to start off your first plan year as not being a large plan year, you get to wait until you've got 121 participants in the plan before you're subject to an audit. This is why this is why we exist, because this stuff is confusing. Now then, the limits are per plan, not per employer. If you want more detail on that, email us at sales@hunterbenefits.com. Now then, The IRS, do you remember when this study was done, Christina? Was this 4 or 5 years ago? Or
It was in 2000 and I want to say 9.
Okay, but I haven't seen anything to indicate the numbers have really gotten much better.
No.
The IRS did a study a while back, and the error rate was inversely proportional to the number of plans and a CPA firm audited. All right, the more plans they did, the fewer errors they had. The auditors who did 1 or 2 plans a year, even though I think there were 25% of the total plans audited, they were over 50% of the total mistakes. It was not good. Pick somebody who's done it before. Now then, plan assets can pay for the audit, or they are unallowable. Allowable as a deductible expense. Excuse me. Catherine,
Yeah?
what do you guess are some plan elements that will make for an easier audit?
Keeping good records.
Keeping really good records.
Knowing what, yeah. Don't you just put
We're done.
Yeah, I would say.
That's it.
Throw the mic down, we're done.
Yeah.
Other things. I think one of the things that's buried in your notes is, man, you just can't wait till October 14th to think about your audit, right? You need to do
Get it
it
scheduled.
well before. I know that a lot of firms that we've talked to try to get through their initial tax work first through April 15th, and then they start working on the audits. But it's good to be on somebody's list early, because there is nothing more painful than being in October and trying to nail down your
Trying
audit.
to find an audit, yeah.
And the whole thing about experience counting, even more so. The last thing you want is an inexperienced auditor in October. I would
Right.
say that is one of the more painful
It's a double
things.
whammy, yeah.
Just because, there's standards in auditing, kinda. There are. Well, but
kinda.
people take different views of things. And the last thing you want is somebody straight out of accounting school taking their textbook out and making you check off every single thing. And the reason I say that is there's certain things that are really important in audits, and certain things that are just like asking for John Hancock for the what was it? They were asking for the
We had a situation once where the large plan auditors were asking for the employer's opinion on John Hancock's pricing methodology for the money market account.
that sounds like cramming for
Seriously.
an exam the night
Seriously.
before. And
It wasn't the DOL. It
No,
was
the large plan
CPA.
auditor did not accept the fact that the plan sponsor simply took John Hancock's white paper on how they valued money market.
So the
It was
point
last
is,
year
it
they
sounds
did the
really
audit.
esoteric, maybe watching this, but the scoop about that is, you don't want to deal with the esoteric on October 14th.
No,
You just
you
don't.
want it done.
So you want it done early. You want to have someone who's done it enough that they actually can weigh out what's really important and what's not.
Right.
You want an auditor where the partner of the firm is really monitoring what happens,
What's going
because they send out the newbies. Well, they aren't sending them anywhere now. The newbies are emailing you for data. And unless the auditor is watching over the newbie will run amok, And
I know our CPA friends don't like it when we talk about it this way, but this has been our experience working with the plan sponsors.
Oh, yeah.
But it's, if there's good direction and good supervision in an established firm, it goes well. But if
It does.
But if it's somebody straight out of accounting school, throw them in the deep end.
Yeah.
Right.
Tell them to finish it and don't talk to me. Man,
Hopefully
those
that's
are
not what's
scary
going
ones.
on. Christina, we talked earlier today. There are
Yes.
some new things coming for the 2020 audit season that are going to make them slightly more painful.
Yeah, for somebody somewhere.
Yes.
The AICPA has come up with their own new rules for auditing qualified plans.
Okay.
And
So these are going to be easier and cheaper, right?
And tell us who the AACP is again.
AICP.
Association of Independent
No, American.
American Institute.
We'll put it on the,
Yeah,
we'll put it in the
AICP.
notes somewhere.
It's a bunch of accountants.
Making up the rules.
It's the professional association.
Yes.
Right.
Well, it's more than that. It kind of governs
It's kind
what
of like
they're
the
doing.
governing, it's their
Yeah.
unofficial governing body,
Yeah.
yeah.
And they've done their study. They worked with the DOL, and the DOL says, "Hey, some of your members are doing really crappy audits. What are you going to do about it?" And they're like, "Well, we don't want the government making rules, so we'll make our own rules."
Yeah.
Okay. Now, the rules, unfortunately, because, everybody knows an audit costs a lot of money, the rules kind of mean that the auditor wants to do as little as feasible
Right.
to
Keep
do
fees
the
down.
audit. So that means they look to the plan sponsor
do
to
more.
provide them with everything in exactly the order and exactly the form that they want. And and I know that the plan sponsor goes, "Oh no, no, nothing
That's an
about
actual
that."
sound effect. We have that on tape.
I don't know that.
What?
So the first thing the plan sponsor does is call their TPA.
Yeah. Well, hopefully they do.
Yeah, and
Right.
do this
Right.
for them. Yeah.
The way from what I've been hearing from some of our ASPA calls and things like that is, whenever I have an opportunity, I'm telling plan sponsors to expect a 50% increase in their bill. Just a budget, okay? Fees are going to go up. We don't know exactly how much.
They're
They have
looking at
work.
more.
They're looking at more. So
And they
I'm just,
can't do the limited scope
Nope.
audit the way they did in the past.
Right.
They still have to go through and look at the investments.
Right. All right. So three
So keep your plans under 100 people
Well,
if you can.
if you can, right? 3 takeaways for a successful large plan scheduled audit. 1, it's the participant count at the beginning of the year. 2, schedule your audit firm, schedule your audit with the firm early. And 3, plan for the auditor to need more information from the plan sponsor, which means the TPA, but these are things we've been giving our auditors since the company started.
Well,
So
you have.
we have, yes. All right, so thank you very much for spending a few minutes watching with us. Hope you had a good week, have a good weekend, etc. If you like us, share, comment, the whole shot. The website, of course, is hunterbenefits.com. And what's our email address?
Sales@hunterbenefits.com.
So thank you very much, everybody. Have a good weekend.
Take care.
Yay.